In this video, we're going to have a look at Dover Corporation, ticker symbol DOV. Established in 1955, Dover is a diversified global manufacturer with over 25,000 employees that delivers innovative equipment and components, consumable supplies, aftermarket parts, software and digital solutions, and support services. The stock is at a 52-week high of $160.66 and low of $127.25. It looks like it has been a rocky 12 months. But the total return of Dover stock is 5.06% over the past 12 months. So far it's up 8.85% this year. This includes price appreciation and reinvested dividends. If we zoom out over the last 15 years, the stock price has performed remarkably well. If we have a look at the dividend history, they have had 68 consecutive years of dividend growth. Seeking Alpha has dividend data starting from 1989, but we can see the regular increases, which is what you want to see as an investor, although the increases are not very big at all. The dividend yield is currently 1.4%. Compound annual growth rate over the trailing 12 months has been 0.99%, 1% over 3 years and 1.22% over 5 years. The payout ratio is only 27.72%, so there is loads of room to increase the dividend. This is reflected in the bull and bear case, hardly any growth, but the dividend couldn't be safer. Now let's look at the finances. Dover Corp has a market cap of $20.33 billion. Looking at recent quarters, revenue has been very consistent. Operating income is up. Seems like Q3 is very strong, as it's similar in 2022. Q3 earnings per share is $2.07, the strongest in the last few quarters, as is EBITDA at $1.71 billion. In 2022, they had $8.5 billion in revenue, 5% annualized organic growth and 15% annualized growth. They had $585 million in free cash flow, which was actually down by 38% from 2021. Based on the 3 quarters so far in 2023, cash flow should be much better. Q3 saw free cash flow up $141 million year over year. They have a full financial year target of between 13 to 15% of revenue. For the 2023 guidance, they expect a slight increase in revenue, continued growth which see a compound annual growth rate of 12% over the last 5 years. On the balance sheet, looking at debt to assets, liabilities are down 4.81%, which is good to see. Assets down only 1.19% in comparison. It has been steady for the last 6 to 7 quarters. They continue to buy back shares, which is great to see. Buybacks benefit all shareholders to the extent that when stock is repurchased, shareholders get market value plus a premium from the company. Let's have a quick look at how it's performed against the S&P. If you invested $10,000 10 years ago and reinvested the dividends, you would have a total return of 192.52%, ending with a value investment of $29,258.35, almost matching the S&P. The S&P would have given you 211.44% return with $31,151.47. Over 20 years, it's even better than the S&P, a whopping 736.93% return, giving you $83,676 compared to $61,702 with the S&P. What an incredible investment. Let's see what the analysts are forecasting. Market beat have an average price target of $161.38, 10.92% upside from where we are today based on 13 analysts. Tip ranks have an average price target of $156.82, 7.78% upside from where we are today based on 11. And Zacks have an average buy price of $159, 9.42% upside from where we are today based on 11. From the targets of Market Beat, Tip Ranks and Zacks, an average price between the three is $159.06. If we look at the value investing models, the intrinsic value calculation is based on the discounted cash flow model. It has a fair price of $192.89, which is 32.6% upside. Based on the trading multiples model, they have a fair price of $169.75, which is 16.7% upside. Then if we look at the dividend discounted model, the long-term growth rate really affects this, with a fair price of $87.45, which is 39.9% downside. If we take an average of the analysts' expectations and the investing models, that would give us a fair price of $150.28. With a 10% margin of safety, that would give us a buy price of $137.05. Given the fundamentals of the company and the strong history, the current price would seem a safe bet. If you want a steady Eddie safe as house stock that you will never have to worry about, then this could be for you. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.